Many people dream of having enough money in their investments to support themselves. The pinnacle of financial freedom would be having no need to work for a living or take money out for your investments. Although it's a dream, it's also a possibility that can be achieved with enough time and effort. Join us as we take a look at the aspects of living one's life off dividends. Stay tuned till the end. What are dividends? First off, we define as to what are dividends actually. A dividend is a payment made by a corporation to its shareholders, typically in the form of cash or additional shares of stock. Dividends are paid out of a company's profits and are typically distributed to shareholders on a regular basis, such as quarterly or annually. The amount of a dividend is typically expressed as a percentage of the company's stock price, and it's paid to shareholders in proportion to the number of shares they own. For example, if a company announces a dividend of $1 per share and you own 100 shares of the company's stock, you would receive a dividend payment of $100. Dividends can be a useful source of income for investors, as they provide a way to generate a regular stream of income from their investments. However, it's important to note that the number of dividends paid by a company can vary over time and is not guaranteed. Additionally, the value of a company's stock and the dividends it pays may fluctuate based on a variety of factors, including the company's financial performance, industry conditions, and overall market conditions. What does it mean to live off dividends? To live off dividends means to generate a significant stream of income from dividends to meet your living expenses without relying on other sources of income, such as salary or pension. This can be achieved by investing in a diverse portfolio by dividend-paying stocks, mutual funds, exchange-traded funds or ETFs, real estate investment trusts, REITs, or other financial products that pay dividends on a regular basis. To live off dividends, you'll need to carefully plan your investments and ensure that you have sufficient amount of capital invested in dividend-paying assets to generate the income you need to meet your living expenses. This may require a significant amount of savings and planning, as well as ongoing monitoring and management of your investments to ensure that they are performing well and generating the income you need. It's important to note that living off dividends carries inherent risks, as the value of your investments and the dividends they pay may fluctuate over time. It's important to carefully consider your investment objectives and risk tolerance before making any investment decisions, and to consult with a financial advisor or professional for guidance. How much do you need to completely live off dividends? Let's examine the size of the portfolio you'll need to rely solely on dividends income. Several researchers have shown that generally a $500,000 portfolio won't provide enough money to sustain the ordinary person's lifestyle in full, but it can significantly lower the amount of additional income you need each year. For the average person to fully cover expenses with dividend income, the portfolio would need to be at least $1 million. A $2 million portfolio would generate enough money for most people to live comfortably. Your balance will rise and your dividends should rise if the value of your portfolio rises over time, if stock prices rise. Additionally, many businesses strive to steadily raise the dividends they pay. Dividend increase may also have a favorable effect on your performance. Depending on the stocks in your portfolio, you'll receive a different dividend yield. Your yield may rise over time as a result of the possibility of dividend growth. Hence, it's important to note that investing in this type of living is going to provide benefit to you in the longer run. 5 ways to live off dividends. Here are 5 ways to live off dividends. Increase monthly contributions. Increasing your monthly contributions to your investments can help you in living off dividends by enabling you to build up a larger portfolio of dividend-paying assets over time. By setting aside a larger portion of your income each month and investing in a diverse portfolio, dividend-paying stocks, mutual funds, exchange-traded funds, ETFs, real estate investment trusts, REITs, and other financial products, you can potentially generate a higher stream of income from dividends. Having a larger portfolio of dividend-paying assets can provide you with a more reliable and consistent stream of income, which can be particularly important if you're relying on dividends as a primary source of income. It can also give you the financial flexibility and security to pursue your goals and dreams without worrying about financial constraints. There are several ways you can increase your monthly contributions to your investments. For example, you could try to cut back on your expenses and redirect the money you save toward your financial goals. You could also consider increasing your income through additional work or by negotiating a raise at your current job. Additionally, you could set up automatic transfers from your checking account to your investment account to make savings and investing easier and more convenient. Invest in a diverse portfolio of dividend-paying stocks. Dividend-paying stocks are those that pay a portion of their profits to shareholders in the form of dividends. By investing in a diverse portfolio of dividend-paying stocks, you can generate a consistent stream of income from the dividends paid by these stocks. First, by diversifying your portfolio, you can spread out your risk and potentially reduce the impact on any one stock's performance on your overall portfolio. This can help provide a more stable and consistent stream of income from dividends. Additionally, dividend-paying stocks tend to be more mature, established companies that may have a history of consistent dividend payments. By investing in a portfolio of these stocks, you may be able to receive a steady stream of dividends over time. Invest in dividend-paying mutual funds or exchange-traded funds, ETFs. Investing in dividend-paying mutual funds or exchange-traded funds, ETFs, can potentially help you live off dividends in a similar way to investing in individual dividend-paying stock. Mutual funds and ETFs are investment vehicles that allow you to invest in a basket of stocks or other securities. Many mutual funds and ETFs focus on dividend-paying stocks, providing an easy way to invest in a diverse portfolio or dividend-paying stocks. One advantage of investing in mutual funds or ETFs is that they offer professional management and diversification, which can help mitigate the risks associated with investing in individual stocks. These funds are also generally more accessible and require less capital to get started compared to building a diverse portfolio of individual stocks. Hence, they make a good value of money for you and thus ultimately helping you in living off dividends. Consider a dividend reinvestment plan, a DRIP. A dividend reinvestment plan, DRIP, is a program offered by some companies that allow you to automatically reinvest your dividends to additional shares of the company's stock, rather than receiving the dividend in cash. One way that a DRIP can inherently help you live off dividends is by allowing you to potentially grow your investments faster. When you reinvest your dividends, you can potentially purchase additional shares at lower prices, which can lead to compound growth over time. Additionally, a DRIP can help you potentially generate a large stream of dividends over time as your investment grows. Think of it like this. By reinvesting your dividends rather than receiving them in cash, you can potentially increase the number of shares you own, which can lead to a larger stream of dividends as the company pays out dividends on a per-share basis. Thus, it's also a good place to invest your money in if you're looking to live off dividends. Things to consider in a company before investing in it. There are several factors to consider when evaluating a company's dividend before you decide to start investing in its dividends. Especially if you're someone who's looking to completely live off the dividends, then you must consider these things before investing in a particular company. Number 1. Dividend yield. This is the annual dividend payment divided by the stock price. A higher dividend yield may indicate that the company is paying out a larger portion of its profits as dividends. Number 2. Dividend history. It can be helpful to look at a company's track record of paying dividends. A company with a long history of consistent dividend payment may be more likely to continue paying dividends in the future. Number 3. Dividend payout ratio. This is the percentage of a company's profits that are paid out as dividends. A payout ratio that is too high may indicate that the company is paying out more in dividends than it can afford, which could be unsustainable in the long term. Number 4. Earnings growth. A company's ability to grow its profits over time can be an important factor in determining its ability to pay dividends in the future. Look for companies with a history of strong earnings growth. Number 5. Financial stability. It's important to consider a company's overall financial health before investing in its dividends. Look for a company with strong balance sheets and a solid cash flow. It's also a good idea to diversify your portfolio by investing in a variety of different companies and sectors to spread out your risk. Important note: tax considerations. There are several tax considerations to keep in mind when living off dividends. Number 1. The tax rate. Dividends are generally taxed at your marginal tax rate, which is a tax rate applied to your last dollar of income. The tax rate on dividends depends on your income level and filing status. Number 2. Qualified dividends. Some dividends are eligible for a lower tax rate, known as the qualified dividend rate. To qualify, the dividend must be paid by a U.S. company or a qualifying foreign company and must have held the stock for at least 60 days during the 121-day period that begins 60 days before the ex-dividend date. Number 3. Dividend income limits. If your taxable income, including dividends, is above a certain threshold, you may be subject to an additional 3.8% tax on the net investment income. This tax applies to single filers with incomes above $200,000 and married filing jointly with incomes above $250,000. Number 4. State taxes. In addition to federal taxes, dividends may also be subject to state and local taxes, depending on where you live. It's important to keep these tax considerations in mind when planning to live off dividends and to consult with a tax professional or financial advisor for personalized advice. Examples of living off dividends. Let's say that an individual has a portfolio of dividend-paying stocks worth $500,000, and the portfolio generates an average annual dividend yield of 3%. This would provide an annual income of $15,000. $500,000 times 3%. If the individual needs $60,000 per year to cover their living expenses, they could potentially supplement the dividend income with other sources of income, such as Social Security, a pension, or part-time work. However, it is indispensable to keep in mind that it is just one example and that the individual circumstances and investment performance may vary. They can depend on your overall approach and plan of investment in dividends and how you plan to approach your financial goals. Given are all the details you need in order to live your life off dividends. If you incorporate these advices into your life and decide to change your life for the better, then you are on the right path. However, it's important to note that investing in stocks, mutual funds, ETFs, REITs, or other financial products carry inherent risks, and it's important to carefully consider your investment objectives and risk tolerance before making any investment decisions. You should also consult with a financial advisor or professional before making any investment decisions.